Hello traders, you are welcome back to the Forex Geek channel. In this particular video, we are going to be talking about the ICT Day Trading Strategy. All right, it's a method that is built on smart money concepts to help traders navigate the market within a single trading session. All right. Now, day trading can feel overwhelming, especially with so much price movement in short periods of time. But the ICT approach simplifies things by showing us that institutions control the flow of the market. All right. By following their footprints, we can understand when and how key intraday moves happen. Okay, so the foundation of the strategy is liquidity. All right, on any time frame, liquidity builds up at equal highs, equal lows, and clear swing points. Okay, so these are areas where traders place stop losses or pending orders. Institutions know this, right? And they use these levels as magnets to fuel their trades. For day traders, spotting these liquidity pools is step one, right? Next, let's talk about stop hunts, okay? Before major intraday moves occur, institutions often sweep liquidity. All right. This means price spikes above or below a level, triggering stops before moving in the true direction. So recognizing these sweeps is crucial because they often mark the beginning of the real move. Now, after a liquidity sweep, and if it happens that we're actually having a liquidity sweep here, then we should be expecting price to go up, at least to test this zone next. All right. Remember that liquidity sweeps usually happen, below equal highs, below equal lows or above equal highs, or basically around areas where, you know, obvious levels where traders set their stop losses. All right, and this can be an example. You can see how price just dropped below this, and you can see this long wick showing rejection. Okay, so recognizing these sweeps is crucial because they often mark the beginning of the real move. Now, after a liquidity sweep, we turn to order blocks. Okay, another block is the last bullish or bearish candle before a strong push. Now, we can see that we had a change of character here, right? You can see this high, this was a high, lower low, lower high, lower low, right? And then we had a higher low, higher high here. So there was a change of character, right? So now, what was the last bearish candle, before we had that particular move? Okay. Let's just mark this off. All right. So now, as you can see, that price actually came back to test this zone, and you will see that there was a fair value gap. There was a fair value gap, right? Making it a legit zone. Okay. So you can see that price came back to test this order block zone right after this liquidity sweep. And this is one of the things that makes this particular zone quite interesting. All right. Remember that after liquidity sweep, we turn to order blocks. Another block is the last bullish or bearish candle before a strong push. It acts as a footprint of institutional activity. So when price returns to this zone after sweeping liquidity, it often provides a high probability setup for day traders. Another key tool is the fair value gap or the imbalance. All right, these gaps happen when price moves aggressively in one direction, leaving inefficiency behind. So you will notice there is space between, it's a three candle pattern, right? The space between the low of, the first candle and the high of the third candle. That is if it's a bearish fair value gap, right? But if it's a bullish fair value gap, we're going to be talking about the high of the first candle and the low of the third candle. All right. So price tends to revisit these areas, and when combined with liquidity sweeps and other blocks, they provide strong confirmation for trades. Another timing. Another thing to consider is timing. All right. Timing is also an important element in the ICT day trading strategy. Institutions are most active during certain sessions, such as the London Open, the New York Open, and key overlaps. So by focusing on these windows, traders align themselves with the periods of highest volatility and liquidity. So how do you apply the ICT day trading strategy step by step? All right. The first thing for you to do is to identify liquidity pools on your chart. All right. You identify those equal lows and equal highs. That's the first step, or consolidation zones. All right. So once you've identified those important zones, you have to watch out for a liquidity sweep. All right. Price should run through these levels, triggering stops. Then you look for an order block or a fair value gap around the sweep. The fair value gap and order block should be around that sweep, okay? So this is your confirmation zone. Now, you confirm with a shift in market structure, okay? If price should break a key level after that sweep, it signals the true move is underway, all right? So after this have happened, you want to watch out for a bullish market confirmation, right? Perhaps you want to have maybe price should form, a higher high and maybe come back to test the newly formed order block. All right. So that's going to give you a confirmation. You need to get a confirmation. We don't just jump into the trade immediately, right? You need to get a confirmation. So you have to confirm with the market shift. All right. Shift in market structure, basically. All right. Then you focus on trading during the active sessions where these patterns appear most frequently. So when you follow this process, intraday trading becomes much clearer. Instead of reacting to every move, you are waiting for institutional setups that repeat session after session. All right. So now, before we close, remember to like this video and subscribe to the channel so you don't miss future lessons. Leave a comment and let me know if you've already applied the ICT day trading strategy in your own trading. I'd love to hear your experiences. And that is it for this breakdown of the ICT day trading strategy. Stay patient, focus on liquidity and structure, and trade with discipline. Thank you for watching, and I'll see you in the next video.